Hey guys, Joel Frank here, market analyst for YouTrading. And in today's video, we're going to be taking a quick look across markets, talking about some of the themes and the macro risk events that we've got coming up this week and how things could potentially play out. So let's jump straight into the video, jump straight into the charts, excuse me. You can see the Dixie here, within recent ranges, still holding below this downtrend, still holding below its 21-day moving average, pretty much completely flat at the start of the week, which, by the way, not too surprising because we've got a lot of risk events coming up this week out of the US and elsewhere. We'll get into that in more detail in a second, but just basically in consolidation mode. The same can be said for some other asset classes as well. You can see stocks here consolidating close to Friday's very strong actually weekly close. We had a rally back above 4,150, so we're not far below yearly highs for the S&P 500. Nasdaq also doing very, very well, actually consolidating at yearly highs. If you look at other asset classes as well, yields are sort of moving within recent ranges, not too surprising there. You see the 2-year yield just below 4.1%, 10-year yield just below 3.5%, all within recent ranges. Gold having a little push back above the 2000 level. I mean, you could probably say that gold's actually been supported quite well recently. The dollar's continued failure to break higher yields within recent ranges. I've actually been saying for a while now that I think gold has the potential to pop higher. Why is that red? There we go. Let's have a black arrow. Um, and potentially retest record highs in the 2070 area. Um, could happen this week, depending on how things go from a macro perspective. Oil coming off a little bit close to recent lows, pretty much unwound all of those OPEC surprise output cut high upside that we saw at the end of last month. So that's what we're seeing across markets. In terms of what's going on, like the main news story to know at the start of this week is the fact that First Republic's being bought out pretty much by JP Morgan, who are going to be sharing the losses on First Republic with the FDIC. But basically, First Republic collapsed at the end of last week and was shuttered as a bank, and it's just their assets that are being bought out now. So bank crisis concerns still very much in focus. But despite that, it seems very likely that on Wednesday, the Fed, the US central bank, is going to raise interest rates by another 25 basis points, keeping that pressure up on the US banking system. Interest rates expected to go from the 4.75 to 5% range to the 5 to 5.25% range. Now, that's very much expected on Wednesday. What will be much more important is going to be the Fed's or Fed Chair Jerome Powell's commentary in the press conference, which is half an hour after the interest rate decision is released. The Fed policymakers generally have been pushing back against the idea of rate cuts later this year, despite the fact that markets or US money markets are betting on an interest rate cutting cycle. Now, why is there this misalignment? Well, it seems to be because investors in US money markets are betting that a US recession is going to come in, that inflation is going to come down as a result, and the Fed's going to be forced to cut interest rates. Obviously, the Fed, they need to try not to be as pessimistic as that, so they're still talking about how they think interest rates are going to there's not going to be cuts basically, and that the economy is still going to do okay. I mean, the Fed seems to be still communicating that they believe in this soft landing narrative, even though pretty much no one else thinks that that's going to happen at this point. But there is a mismatch between the guidance and the money market pricing. That's all I'm saying. So if Powell does come across as hawkish, that could upset risk assets a little bit potentially and send bond yields higher, the dollar higher, stocks, crypto lower. But the Fed's not the only thing we've got coming up this week. We've got ISM manufacturing PMI on Monday, ISM services PMI on Wednesday, ADP jobs data on Wednesday as well, JOLTS jobs data on Tuesday. This will be interesting because it's expected to fall to fresh 2-year lows, under 10 million job openings. Main event from an economic data standpoint is the jobs data on Friday. Then we've also got the ECB hiking interest rates also by 25 basis points probably on Thursday. The RBA holding interest rates probably on during Tuesday's Asia session. And Canadian jobs data. And actually, where was that? Yeah, Tuesday's got some Eurozone inflation figures as well, which should be interesting in the context of the upcoming ECB meeting. So, a lot going on this week. Um, Still got bank crisis concerns. We're still assessing, is there a US recession coming? How quickly is it coming? We've got the Fed hiking interest rates still. Markets are expecting that this is going to be the last interest rate hike, followed by a prolonged pause, followed by a rate cutting cycle. But how does the Fed's guidance sort of marry up with those current expectations? Very much there is the possibility that we could get shaken up out of recent ranges. Like for example, if how could these play out? Let's take a look at the Dixie here. Say the data's strong and the Fed is hawkish. Well, you could get a little pop higher above this trend line. Um, Alternatively, say the data is weak, like the jobs data is bad and the ISM data is bad, and the Fed. I mean, they're not going to have a dovish pivot yet, but say that they fail to convince the market with their sort of message against rate hikes, well, potentially you could get a breakout to fresh yearly lows. And, that could go hand in hand with a breakout to fresh yearly highs for the S&P 500 and potentially for gold, a further push higher as well. You could have a look at Bitcoin, and that's sort of kind of close to recent highs, a little bit choppy, seems to be consolidating, but if gold's going higher and the dollar's going lower and yields going lower, Bitcoin could potentially go higher as well. So yeah, these are some of the ways things could play out this week. Obviously, I'm going to be covering everything throughout the week. Got to be talking about a couple of trade ideas in a bit more depth tomorrow. Then another market update on Wednesday. Then some more trade ideas on Thursday. We'll be recapping everything as it happens. So yeah, guys, hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.